of the winter 22 period, where they are now and what the key drivers have been and where those prices are likely to go over the coming weeks and months. We'll then go into curve prices and speak a bit about where prices were again at the start of the winter period versus where they are now and what's likely to drive the MVP over the coming months. So just to start off by framing the day-ahead prices, the prompt prices, where they've been since the start of the winter period in comparison to the highly volatile period that we're just coming out of since 2022. There's been huge volatility since then. However, at the moment, since the start of winter 22, day ahead has actually dropped down and it's averaging around 168 pence per therm so far this winter. So since the 1st of October, versus an average price of 220 pence per therm over the most recent summer period. So since the start of this winter, you can see a price drop there starting in early October into November. This price drop was driven mainly by an increase in temperatures. We had very mild weather coupled with high wind levels. Supply was very healthy. There were no significant supply outages, so the system felt quite comfortable and prompt prices responded by dropping off a little bit. However, then the end of November came and the start of December, we started to experience a bit of the winter's first cold snap, and we've seen prices start to edge back up. And there we've seen them spike there at the 382 pence per therm on the 7th of December. So what led to that was a combination of a few different things, namely an increase in demand from demand on the domestic supply side, and also from the electricity generation side, because wind was also really, really low at the time. And also a third contributing factor to that was the fact that there were a number of supply outages. So all these things came together to lead to that price spike that we see in December. However, only in the subsequent days following that price spike, despite the fact that fundamentally demand was still really, really strong. We weren't out of the cold spike yet, or the cold snap yet. Wind levels were still quite low, but actually the system was really well supplied, and there were a number of days where the system was in oversupply, and that then led to a softening back down of prompt prices. And that's kind of where we were then towards the end of December. Prices had fallen even further back as temperatures became a bit more mild, and also wind levels were about 20% above seasonal averages. So then that led to then the start of the new year. So since the start of January, day ahead prices were averaging around 157 pence per therm. So that's about 20% lower than the same period last year. Despite the fact that we experienced another cold snap last week, there was no significant price spike despite that, and also despite the fact that wind levels were again quite low. So that weakness has been driven by essentially the healthy supply scenario in the market, and the market just feeling a bit more comfortable in terms of its ability to meet any increases in demands. So the supply scenario at the moment, storage, gas and storage, is still at around 80% fullness. That's higher than the majority of the same period over the last number of years. There's currently 13 LNG vessels expected to arrive into the UK by the 14th of February. And there hasn't been any significant supply outages. So right now, considering the current bearish fundamentals, the low demand and strong supply, and how the market reacted to that recent cold spell by not increasing significantly, it's difficult to see prices increasing significantly in the short term. Unless something significant changes on the supply side. So if there's any kind of significant unplanned outage or threat to supply, we could still see a further price spike. But the good news is that if everything kind of remains the same, we should see a little bit of more stability for the remaining winter period. But I think if the past kind of year or so has taught us anything, it's, we're still in winter. We're not necessarily out of the woods yet. So just to be mindful of any potential supply risk that could lead to some volatility. But likewise, it's also unlikely that prices will fall much further from where they currently are. And that's actually linked to LNG. So one of the main reasons as to why prices have softened both on the prompt and the curve is the optimism around strong LNG supply coming into the UK and other European markets, making up for shortfalls elsewhere. But the reason why so much LNG has been turning up in the UK is because of high prompt prices, and it's been a very competitive market. However, as we see other Asian markets, particularly China, starting to kind of come out of their COVID restrictions and an uptick in economic activity, there's potential there that if prices start to increase in Asian markets, the LNG could be redirected into there. So it appears that there's a natural price floor built into the NBP at the moment in order to continue to attract LNG at its current levels. And that price floor is around 135 pence per therm. Now that's something we're watching and, could change, but at the moment it's looking unlikely that prices may drop significantly lower than that level for a sustained period of time. But in summary, the majority of fundamentals are quite neutral to bearish, apart from maybe some day-to-day fluctuations, which is quite normal during the winter period. The healthy supply outlook should mitigate any increases coming from any potential cold spikes, but the market does remain sensitive to any potential risk to supply, which is just very important to remember. On the curve then, I'll move on to, so similar to the prompt, curve prices have also fallen back quite significantly since the start of the current winter period. So this graph here shows the grey line there is where the forward curve was at the start of October 2022, and the blue line there is where the forward curve currently is. So on average, there's the difference between the two is around 162 pence per therm. So that's quite a significant drop back. And I think that difference there encapsulates the risk that was previously built into forward prices at the start of the winter period when there was so much uncertainty. And it also highlights how much that risk has actually dissipated in recent weeks. So also the winter 23 contract, the current front winter contract is currently trading under 200 pence per therm mark at around 179 pence per therm, and that's half what it was on the 1st of October. So all that kind of softness has been driven by an increased sense of optimism around supply for the remainder of the year, considering the current health in the system right now, which we've already spoken about. This year, we could see an increased level of stability around LNG arrivals due to a recent US-UK LNG deal, which should see around between 9 to 10 billion cubic meters of LNG arrive into the UK this year, which does equate to similar levels that were imported since imported last year, but having that with in a long-term contract means that the UK reduces its exposure to a volatile spot LNG market. So also there's potential for a decrease in overall European gas demand levels, which is also a bearish indicator. And that's linked to the fact that France is set to increase its nuclear capacity over the coming weeks, which again should lead to an increase in overall demand. Curve factor or risk factors on the curve then as well. So although we have seen significant bearish sentiment over the last number of months, there is still some risk factors there to be aware of. So the market is still quite vulnerable towards any significant reduction in European storage levels or any significant threat or risk to supply. So similar to the story on the prompt. Oil markets could also be exposed to an increased level of volatility over the coming months, again driven by potential future demand from China, and generally any kind of volatility and increases on oil markets can be fed into far curve contracts. Also then even though we're kind of seeing that there's potentially going to be an increase in stability around the number of LNG arrivals this year, there's also risk of less overall LNG arriving into the UK in favour of higher priced Asian markets. And again, that will just depend on where the NBP prices go versus where Asian markets go. So in summary, curve prices, they have softened significantly in comparison to the recently volatile period. There is some potential there for further losses depending how the remainder of this winter goes. Generally, we would kind of naturally see a bit more of a drop off in forward prices as we come into the summer period. But overall, contracts are likely to reflect the varying levels of optimism surrounding supply comfort. So that's essentially where we are right now. So some better news in comparison to maybe a few months ago. And I will hand over to Conor.
Thank you, Joanne. So we will have time for questions at the end once Conor finishes his presentation. So we'll hand over to Conor Fitzpatrick, who's head of trading, and we'll go through electricity market and drivers.
Yeah, thanks, Barry and Joanne. You can see my screen, can you? Perfect. So I'm just going to elaborate on what Joanne was speaking about, as gas is. Sorry, let me just move. Yeah, so gas obviously being the most fundamental driver of power prices in Ireland. I'm going to quickly go through the recent pricing trends of the Irish electricity market, how wind generation has a significant softening of those prices, and then have a quick look at how the fuel mix is looking, both in 2022 overall, and how we've kind of done in the first few weeks of 2023. And at the end, just to touch on the challenges and prospects we're facing in with relation to forward power hedging. Okay, so in terms of recent pricing and how the forward curve is looking, this is looking very similar to what Joanne presented on the gas side. So obviously in 2022 we saw that volatility really reach another level. And it was kind of up and down throughout the year, as you can see there. At the moment, we're down. We're down in the first month of 2023 compared to December, and the forward price is looking relatively more flat than what we've seen over the past year. I just have to make the caveat that this forward price is highly indicative. Based on the challenges I'll be discussing in a few minutes. So just to give some context to the figures we're seeing at the moment, 2021, the total calendar year average price outturned at €136, and a lot of that was due to the increase we started seeing towards the end of 2021 from August, September 2021 onwards. That's when we really started to see the gas price go up. And then 2022, obviously, given everything that went on in the world, our average day ahead price outturned at €226. So 66% is it's a huge increase in wholesale power pricing. And in particular there in December, the average for the month outturned at €277. I believe August might have been the only month that outturned higher than December in 2022. But things have looked a little bit more favourable into the start of 2023. So for the first half of January, our average day-ahead price has outturned at €157, which is approaching a 50% month-on-month decrease from the end of 22. A lot of that has to do with very high wind levels and the unseasonably mild temperatures we had around New Year certainly helped. So just to illustrate how much of an effect wind generation does have on the day-ahead price, this is just a week taken from recently in January. On the left, we have a scale of 0 to 100% of the all island electricity being generated by wind. So you can see there on days where 75 tends to be the, I guess, engineering limit on how much wind we can handle on the system. So if we have 60 to 70% on any given day, that's very high wind. And on the right here, our scale is the average day ahead price for the day. So you can see there as there's a very direct correlation with as wind drops off, the day ahead increases. So we go from what is just over 125 euro on the 15th of January up to almost 200 euro on the 16th, and that's due to wind dropping off as well as gas movements. But just to illustrate just how significant wind has in short-term pricing. Our fuel mix then. So for 2022 overall, wind generated 36% of the all island electricity demand. Coal was up to 10%. So coal was called on in just due to the I guess the uncertainty in the gas markets. So that's why coal has increased to 10% there in 2022, but we're hoping that's only a short-term trend. And then CCGT being combined cycle gas accounted for almost 50%. Then 2023 so far, again, this is a very small sample size given we're only a couple of weeks into the year, but we had a very strong start to the year in terms of wind generation, and we're almost up at 50% after halfway point of January, and the gas then accounted for about a third of our demand needs. And coal, as you can already see, is down a couple of percent there. Other sources of energy would include pump storage, waste to energy, and the very small amount of solar we have on the grid at the moment. But we will see over the coming years, solar will have a growing influence in our fuel mix in Ireland. Okay, so one of the bigger challenges we're seeing at the moment is securing power hedges. A big reason for that is mainly just because the Irish power market is nowhere near as liquid as the British gas market, which we're able to get volumes without much issue. This is a market-wide issue, and we do try and secure hedges for smaller volumes, given that that's what a lot of our customers are looking for. And unfortunately, the firm offers for those smaller base loads, they aren't guaranteed at the moment. We are working on it every day. We're engaging with the market every day and seeing what the options are. And a lot of it comes down to market volatility and risk. And when we have gotten firm offers, they have included, risk premiums. Again, just leaning on the lack of liquidity in the market. When it comes to power generation, generators are on the hook for margin calls, particularly due to the increase in wholesale prices over the last 18 months, which has restricted generators' ability to give firm offers. So we're looking at alternative solutions and any other ways we can offer some sort of budget certainty. And one thing we're kind of pushing a lot at the moment would be corporate PPAs and renewable hedging with Irish generators. And just to finally elaborate on that, Flowgas Enterprise were the first originator of a Supower-led corporate PPA in Ireland in 2022. So we are leaders in this area. We believe in acquiring budget certainty from getting your power directly from renewable and sustainably sourced power in Ireland. And wind PPAs are, there are short and long-term options there for wind PPAs. They wouldn't be as the difference between a wind PPA and a more traditional power hedge is that the the base load isn't 100%, you know, all the time, which given due to the nature of wind, but it certainly offers fantastic budget, well, relatively good budget certainty, and what would be below the indicative forward curve we'd see at the time. So it's definitely an idea we're trying to push, and yeah, I'd if it's something that you'd consider, I'd definitely recommend speaking to our commercial and renewables team about that. Okay, so that's all I have. Thanks for listening, and I guess I'll hand you back over to Barry and Joanne, see if there's any questions.
Many thanks, Connor. So listen, we'll open up in terms of a Q&A. So if you want to put a question into the chat, feel free, or just open up your mic and shout out your name and question. But we have 2 questions to start with from John Cross. So one each, one for Joanne, one for Connor, nice and fair. So Joanne, we'll start with yourself. So from John, sounds like you're reasonably confident that the inevitable cold snap should not lead to a large price hike in gas.
No, is the short answer. It shouldn't. Once there's no significant change in terms of the supply outlook. So at the moment, as I mentioned, gas and storage is still at around 80% fullness in the UK, which is a really strong position to be in, you know, at over the halfway point in winter. So we still kind of have that that source of supply to use, even if there is maybe some smaller unplanned outages from pipeline supply, and the continuation of LNG arriving in quite high numbers. As I said, there's still, I think it's 13 LNG cargoes expected to arrive over the coming weeks. So so it would take something quite significant, like not just a cold snap similar to what we've seen kind of already, to lead to a significant price increase. Like any winter period, there should, you know, we'd expect some small fluctuations, but probably nothing more than what we've seen maybe since the end of December and into early January. But again, you know, if anything does drastically change in the market, we'll be notifying all our customers of that.
Okay, thanks, Joanne. And maybe just a question from myself while you're talking, Joanne. In terms of, you know, putting yourself in our customer's shoes and looking out to winter 2023, what do you think is a good target price that people should bear in mind?
Kind
in
of looking
hedging?
like looking at the previous winter, I suppose it's a matter of context. Like winter 21 outturned at 231 pence per therm, which is significantly above where you can potentially lock in winter 23 right now. That level is about it's just under 180 pence per therm. But then we also need to kind of look at where the current winter is. So far, winter 22 is outturning at just under 170 pence per therm. And as we were kind of saying, there does seem to be some room for curve prices to maybe drop off somewhat if the continuing kind of optimism in terms of the longer term supply outlook remains and improves, then you know, potentially maybe if a slight further drop maybe of around 150 pence per therm could be a good target price. But again, you know, we're not trying to beat the market here. It kind of does depend on your budgets and looking at where the market is now. And you know, if you know, a winter at sub 180 pence per therm makes sense for your budgets, then you know, to have that kind of level of price certainty, then you know it's still important to kind of recognize that value that's potentially there right now as well.
Okay, and just one more question, Joanne. In terms of LNG supply and competition from Asia, is that likely to have an impact now in the coming months?
Yeah. Well, as I mentioned, I can talk about it a bit more. Like the nature of LNG is that, you know, it's mobile. It can you know, particularly when there's so many cargoes that are traded on the spot market, that they're not built into kind of longer term contracts. So that means that the majority of LNG is traded on the spot market. So they'll literally go wherever the best price is, and that best price has been the NBP and other European markets, considering the volatility over the last kind of year or so. So if we do see NBP prices start to drop back significantly more than where they are, and prices start to kind of tick back up in Asian markets as there's a bit more of a return in terms of economic activity over there, which would lead to an increase in demand, then then we could see a reduction in the number of LNG cargoes arriving into the UK on a spot basis. So that'd be something that we'd be watching quite closely, because LNG, that will basically be the marginal source of supply for the UK and other European markets. So it's definitely important to keep attracting that, and the only way we'll do that if prices remain competitive.
Yeah, so it's one of the main price drivers now, so it's something worth keeping an eye on.
Yeah.
Thanks, Joanne. Conor, move on to you. So from John Cross, percentage impact on electricity pricing between wind and gas. Is there a predicted percentage contribution from wind for the full 2023 year?
Yeah. Hi, John. How's it going? So the impact on electricity pricing between wind and gas, really, it depends on a couple of things. It depends on the relative demand on the grid at the time of the wind generation. We tend to see stronger dampening overnight, given that that's when demand is lower. So it could be a scenario where in a case where overnight pricing might be about €100 megawatt hour. If it's a high wind period, day ahead pricing can go to zero. So, and then I guess during daytime periods when the all island demand is higher, as I kind of illustrated earlier, it could be as much as 50% dampening on the electricity price compared to a non-wind day. Again, this would all just feed into short-term pricing and wouldn't necessarily contribute to the forward pricing of electricity. And just on your other question there about the predicted percentage contribution from wind, I mean, the ambition for the end of the decade is to have as much as 70 or 80% on the grid overall. We're in at about 40% at the moment. So I would say that if 40 to 45% for 2023 would be a fairly big success. Now we are just under 40% last year, which was, I think, a slight decrease on 2021. But certainly going forward, the ambition is going up year on year. And this year I would hope for 40% minimum. And over the next couple of years, hopefully we'll get closer to the 50% mark.
Okay. Thanks, Conor. I suppose just another question from yourself. In terms of going into this winter, there was some concerns around capacity for electricity in the marketplace. Looking towards winter 2023, do you think there'll be emergency capacity plans in place? Will there be issues there of concern?
Well, I think the previous winter just gone, there was very little in terms of system shortages and amber alerts compared to previous years. There's more and more, particularly more and more renewable generation coming onto the grid now at scales we've never seen before. So I'd be confident, particularly over winter when wind tends to be at its highest, as our wind capacity goes up across the island, that we'll be less likely to see such shortages. But again, I can't rule anything out. I'm unfortunately I'm not the grid operator. I can't say for sure, but I certainly think the previous winter was signs for optimism compared to previous years.
Yeah, exactly. Nobody can give any guarantees there, Conor. I suppose there's a question here, Joanne, for yourself from Dort, which will relate to gas supply. So the process in case of supply shortage of gas.
Is it like, I assume that relates to if there's, maybe like a gas balancing alert being issued. That would be more kind of networks like GNI, and there is a specific kind of process around that which we can which we can kind of get back to you in detail around, but it does relate to there be like a gas ban single alert potentially released by the UK, if that would then have a knock-on effect on supply coming through the interconnector into Ireland, and then it would be networks then that would then liaise with suppliers if there is any action to be taken by maybe like a large daily metered customers initially. But that's something it's at the moment anyway. It looks very unlikely to happen this winter. I know there was some talk of it at the start of this winter period. It looks a bit more unlikely right now. But that's a process that we can. I'm sure we can kind of get more. Like the kind of published process and send it on if you need it.
So at the beginning of this winter, Gas Networks Ireland did state that it was highly unlikely to be any shortages in Ireland, and that then has a knock-on impact in terms of electricity because of the gas power generators. And I suppose in terms of if there was gas shortages, the process is there's priority customers, for example, hospitals and the like. But highly unlikely. But there is a process there with Gas Networks Ireland and with the CRU, so we can send on more information. So let's see if there's any. So Tom Sweeney, short, medium term, is there a tendency to float instead of fixing positions? So I suppose that comes down to your own policy and your own appetite in terms of what do you want to do for your budget. So we'd always recommend you to actually look what's the best decision for your budget and take it from there. So most customers do have a flexible approach in terms of floating and locking in some positions in the forward if it looks like good value. So that's what we're here for, and that's what our account managers are there for as well. So that's a conversation you can take up, Tom, in terms of with your account manager, and that's across the board for everybody listening. We're here to discuss, and we're here to outline options. So listen, is there any further questions? Does anybody want to jump in? Okay, so listen, many thanks to Joanne and Connor. Thanks for your presentation. I hope you found it insightful. We're here to help, as I said. So your account managers are available to have a discussion around your budgets, you're looking at hedging options, or just general information on the marketplace. That's what we're here for. So many thanks for your time. We'll leave it there. The recording will be available if you want to go through it again, and the presentation will be available as well. So many thanks, and we leave it there. Thank you. Bye-bye.
Thanks, everyone. Bye.